Hey everyone, welcome back to another episode of Brick by Brick Stories of Homes. This is your host Edmy with my good friend and host
Darwin.
Yeah, so we're back again to talk about real estate, talk about everything, what's going on with us. Last week we talked about why we're doing what we're doing, kind of like the integration of real estate into our daily living. So basically in this episode today, I kind of like want to have us dive a little bit deeper into what does buying a home mean? And it's like we talk about, getting ready to buy a home, but what's the process?
Yeah.
How do you get started?
Yeah, that's a good. Yeah, it's not as easy as everyone says it.
So I'll kind of like, since the process start with you as a loan officer, what's like
the process with you, right? Because usually they reach out to you, goes, "Hey, Emmy, I want to buy a house." Like, okay.
Actually, yeah. You know what? Lately, it's been happening a lot more like that, where they come to me like, "Hey, I'm thinking about buying a house," and then I'm like, "Well, there's this guy you need to talk to."
Well, the big thing is pre-approval and pre-qualification are probably the two big terms.
Okay.
First-time home buyers here, right? What's pre-qual?
Yeah.
Pre-qual is me telling you I make $1 million a year. Mm-hmm. My car's paid off. I have no debt. And just by what you tell me, you would qualify for X amount of dollars, right?
Okay.
There's nothing backing it up. It's literally just you telling me, and I'm just believing you. Right?
Okay.
Now, pre-approval is you tell me you make $1 million, your car's paid off, you have no debt, and you got $1 million in the bank. Okay, well, show me your pay stubs, show me your bank account, let's pull your credit. Let's actually back up what you're saying with documentation. Proof. That pre-approval is key, and most people selling their houses or most professionals won't even talk to you unless you're pre-approved.
Okay.
Why? Because they know that it's backed up by something, right?
Gotcha.
It's actual work by loan officers like myself.
Yeah. I mean, one question on that aspect that I get a lot, which I think relates to this, is, hey, I spoke to X person and it took them a few hours and I got a pre-approval.
That's a great point. Like you said, if you're a salary employee, I make $100,000, salary employee. Here's my bank account. I got 820 credit. Yeah, take an hour, no problem. But then you start talking to nurses or people who are self-employed or overtime or switching jobs or got not strong credit or I got $5,000 in my bank account. Well, then now you got a lot of moving pieces you got to now figure out navigating. Try to a lot of Uber drivers are my favorite, right? Uber drivers. Oh, I made $100,000 last year. Well, you did. You're not lying to me. But you look at your tax returns. You write off the entire world. You made $7, right? So that's always,
we gotta love those.
It's always tough to get past that. Where you did, but you didn't, right?
Yeah.
The big thing is, for the most part, I can only qualify you on taxable income.
Okay.
Right? So that's why W-2 employees are great because their income's always taxed.
Yeah.
Self-employed borrowers, you pay your tax when you file your taxes. Where, people are like, become self-employed where I could write off the world. Yeah, that's great, but it's not great when you're trying to buy a house.
So that means the less income that's taxed on, that means the less income is going to be used for you to get pre-approved.
Correct. Right.
Okay.
People use the term purchase power.
Okay.
Right? So that's why pre-approval is so important because we've done that homework, right? Where it can take an hour or it can take a couple of days. I got one right now where they own a property, they're using that income, using the credit. She's on maternity leave. She's buying, she's salary, but once she go back to work, where that's a little more complicated, moving pieces.
Okay.
Right? So people can't say, "Well, I make $100,000." You're not lying. You do, but you also took a loss in your property. You got a lot going on. Right?
So that means it's not as simple as, okay, I come to you. Here's the information, and I get a letter in like 2-3 minutes. Where I can start shopping for a house. So if you want to have something that's strong enough for you to be competitive in the market, it takes a little bit more digging into, right?
Well, I think that's important where the realtor you're working with or your team has a great reputation Also, the loan officer they're working with has a great reputation. You know, if it's somebody to, you know, a company that's not well known, or you know, it's the first time working with that person. It's important to kind of like, you know, for example, I have my personal stuff I've worked with you, your stuff I've worked with back and forth. It's important that you work with people that people trust and done business before, right?
Yeah.
And that builds your credibility, right? Because then if there's a race and you put an offer and there's a tie, I can call like, oh, I know Darwin. Darwin's a great guy. Or I know Edmy always closes loans. He always closes, no problem. And that rapport and that credibility is very important.
Yeah.
Right?
No, yeah. So now I know that's usually when I start doing a little bit more work is like after they get pre-approved. Now it's time, the fun part, where we start looking at houses, we start prepping offers and making bids and all that. But, you know, now other than providing the information on the pre-approval part, is there anything else that's involved into that first step of getting ready?
It's getting your finances ready. You got it.
Okay.
You know, don't go open a new credit card. Don't go up a new debt. Don't go buy a car. Don't go buy a boat. Don't go do anything that would. The big term is debt to income. It'll ruin your debt to income, right? If you're making $50,000 but have $1,000 car payment, that's a problem, right? It's not. You're not going to afford a mortgage and that big car payment. It doesn't work, right? Or, you know, the big one is, I started to go buying furniture. That's a problem. Did you finance it? I started financing it. Or now you're going to hit you for that monthly payment, right? Or, you know, my car's engine broke down. Okay, go buy a used car for $2,000 to get you around, right? Don't go buying a Bentley for no reason.
But I think that's true throughout the entire process, not just as during the approval, because I remember I had this client where 3 weeks before closing, they went and bought a brand new car, a brand new truck.
So great, you make a good point. Is we get notified throughout the process. So let's say you started today, you started the whole process. We get notified periodically if any new debt hits your credit report. So great story. Borrower calls me on a Saturday and says, I'm going to get a new car. Can I get a new car? My car died. So I jumped on, looked at it. It's like, all right, if you stay around this X dollar amount, you are good to go. No problem, because you know you're paying off the current car. You're going to take that pretty much similar to what you're doing. No problem. Monday comes around. Tuesday, I get a phone call from our credit team. Goes, hey, we got a new car payment on there. I'm like, yeah. Is it around this dollar? She goes, no, it's 3 times as much. I'm like, what do you mean? I call the borrower. Goes, it's 3 times what you and I specifically talked about 3 days ago. She goes, how did you find out? How did I find out? What do you mean? How did I find out? She goes, is that a problem? 100%.
100%.
I can carry this, and you can't carry a 3 times car payment.
Yeah.
But it blew my mind. She goes, how did you find out? She didn't think we found out. We found out.
Hey, I mean, the thing we always say, it's like you're borrowing thousands of dollars. Everything is going to come to light. Nothing is going to stay hidden.
We'll give you hundreds of thousands of dollars, right? What's the average house right now? 400,000 or 500,000? $400,000. You better believe we're gonna find it. You know, when I bought a car, you bought a $20,000-$30,000 car. Yes, multiply that by hundreds. What do you mean? Stop talking to me. What are we doing?
Oh boy. The other question that I got was, how do you set a budget? It's like, as you starting the process, I mean, it's simple. Hey, you can look at, all your finances and everything, but is there something different when you're buying a house that you should look into or consider when you're setting up that budget?
That's a great question. On paper, just because you can buy $1 million house doesn't mean you should buy $1 million. Right? You'll get approved. The bank won't submit it, right? Because at the end of the day, it's all numbers and formulas.
Yep.
But when you sit down with your significant other, or if you're on your own or whatever, you still got to feed your family. You still got to, put your kids through, school and soccer and baseball, and you still got to pay utilities. You still got to pay your electric bill, the heat bill, right? So that has to be considered into your mortgage, right? Can I still do those things and pay my mortgage? If it's well, I have $12 left in my bank account, that is a problem, right? Because what happens when an issue comes up, which it always does. Right? I have a family of four. I have 4 children.
Yeah.
My kid last a month ago had dental things we had to take care of, right? So that always come up. So that $12 is now a problem, you know.
Yeah. No, I mean anything adds up to it. Anything that increase to the budget or to whatever math was applied to get you pre-approved, anything that veers off of that plan makes you have to sit down and look at the numbers again.
Yeah, like we don't take consider your cell phone bill, right? You can cancel your cell phone bill tomorrow.
True.
We don't consider your car payment. You consider your car payment, your car insurance, right? You consider those things, right? Because you can switch those, whatever. So there's certain bills that we don't look at that you also have to take into consideration. Right, a lot of things we see now is like a firm, Kalana and things like that.
Oh, the small, buy now, pay later.
Yeah, those are big right now. Those are that's for a different day, but those are big right now, and you don't consider the. Well, I'm going to pay $100 a month. Well, okay, you do that 7 times, it's $700 a month, right? That's a problem.
Yeah. So that means anything that you can't cancel that has like a payment arrangement has to be considered.
Yeah.
And anything else that you can cancel or
like you can't.
I guess
but expensive.
But those are things that you still spend on that you need to have. Money left over from after you pay your mortgage.
Yeah, a lot of people doing fantasy football right now. What does that look like?
You do fantasy football?
Of course I do. Come on.
No, I'm a die-hard soccer. So,
yeah. I want to World Cup. I want to go next year. I want to get tickets.
That'd be actually pretty cool.
That'd be great.
We should.
Okay.
So, pre-approval, we get something solid. That's usually when I work with folks so that we can start looking at the property.
To interrupt you. The big thing, and I think, is people try to hide things. I mean, like a better word, hide things, or not tell you, leave things out.
Yep.
I'm not here to judge.
Yeah.
We all got stuff going on. I can't help you. I can't figure it out for you unless you tell me. Right? Once it gets to underwriting, we have a phrase, you can't unsee things, right?
Okay.
It makes it difficult to now navigate that. If you tell me in advance, like, right now, immigration is a big problem. It's right? I'm renewing my green card, or I have this. I have a borrower who, I looked at the green card expired, and she goes, hey, I'm renewing it, I should be getting the mail in a couple of weeks. Cool, thank you for telling me. So now I know in advance, like, the underwriters go, hey, the green card's expired. I already know that. I already got it's in the mail, blah, blah, blah. But I can navigate that with already in advance.
Yeah.
It looks a little ridiculous when you say, it's expired? I didn't look at the date? Like, no, I knew how to think.
So that means, when you say underwriter, I kind of like want our folks to understand. So once you give that pre-approval, afterwards, when I do the interesting part, we get an offer accepted. The file doesn't stay with you to give the final stamp.
No, great question. So it first goes to the processor.
Yep.
So actually, first I go to my sister, and my sister will take a quick look at it. Then I'll go to the processor. She takes a look and says, okay, you still need X, Y, Z, right?
Okay.
Your short funds, a lot of times is our borrowers, they're getting gifts.
Yep.
Right? The short gifts. You're giving them short money, whatever. Oh, yeah, you're getting a gift, no problem. And then it goes to the underwriter. Now, the underwriter is going to scour and look and find, she has her own process, most times a woman. It is men too, sorry. Scour it and go through it. She has her own system she goes through, so that there's no other debt, and they have a whole thing. And, and she spits back like, oh, the loan's approved, but I need these 12 things.
Okay.
Right? For example, is in your culture, in a lot of cultures, is susu. I know susu.
Love it.
Susu is, but you have that conversation ahead of time. It goes, I'm getting susu, or I'm getting a gift from mom, or I'm doing this. All right, this is how to document it, right? But I can't tell how many times you look at, I need updated bank statement, you see a deposit of $20,000.
Where did that come from?
That's the source we talked about. But yes, but remember the part where I said don't deposit that money because I can't source it? You need to go get a gift and whatever we decide at that point. But that's the thing, whereas you have to trust the people you're working with and know that I've seen this movie too many times. Like I know what to do. If you do it this way, I would close.
Yeah.
And it's funny. I can't tell you times where I get a loan from a different lender who, for lack of better words, didn't do a good job, and they said, "Oh, you did so much better job as well. I saw the landmines, and you literally did exactly what I told you, and we went around the landmines. And when you closed, no problem." She goes, "Yeah, the other, if you don't do your job correctly, you land on a landmine. It's the experience is not good. It's not. Yeah. I'm going to the process. I'm buying a house right now, and obviously I can't do my loan." The other loan officer, unfortunately, I do know what to look for and what I'm doing, so I'm proactively giving all these documents. He's like, how'd you know? I was like, it's not my first rodeo. Right?
So, in a nutshell, what's the role of the underwriter? What do they do, aside from checking the file?
They are the decision maker. They're the ones who say, there's people behind them, they also got to prove it, but they're the ones that are saying, hey, you give me X, Y, Z, you're gonna be good.
You're gonna be okay. Yep.
They're the yeah.
That's like with the final stamp. Yeah. No, and I think that it's important to know that there's a whole machine behind just, hey, you submit the initial documents, you found the house that you like, you fortunate that you get and negotiate the offer to get accepted, but there's a few other steps that happen so that we can get to that, wonderful closing day.
Well, the first step is you, right? Step one.
Yeah.
Right. Most of the time they do find the realtor first.
Yeah.
Right?
Yeah.
Step two is you're going to introduce me. You introduce them to me to get a pre-approval.
Yeah.
Right. The third step is I'm going to get you pre-approved.
Yeah.
You're going to give me all the documents. I'm going to give back to Edmy. Here's the pre-approval. Right. The fourth step is you are going to go look for a house.
Yeah.
Find a house. Get accepted offer. Bring it back to me. And then the magical part, the fifth step, is where the process now actually just starts of you buying a house, right? Going to the processor, going to the underwriter. But now once you get an accepted offer, there's two main big things that are going to happen. One is an inspection. Now, keep in mind, you don't need an inspection to buy a house, right?
Yes.
That's an option for the buyer to either do it or not do it depending on the house. And that's, if the bank goes not, we're going to require you to get an inspection. And we're going to require you to get an appraisal.
Yeah.
Which means, now, appraisals are very regulated in my world. Extremely regulated, right? I don't even have to talk to this appraisal. We have a whole appraisal team whose job is to deal with the appraisal.
Yep.
So what I do is I submit it, they get in a pool, appraisal gets appointed, they're going to reach out to you to schedule the appraisal. They're going to go out there and say, let's say you're buying a $500,000 house. They're going to go out there and take a look at the house, and then they're going to send us back a report that says house is worth $500,000 or the house is worth maybe
more or less,
whatever. But at that point, it's not done. There's an appraisal team that has to review the appraisal report and make sure because again, it's very highly regulated. Make sure the appraiser did the right job. Make sure they're licensed. Make sure there's the houses that he's comparing the house you're buying are actually legit houses and not just made up houses. But there's the whole thing, and then a lot of things now. If the appraisal is, you're gonna hear two terms: as is or subject to. As is means you're good to go. Closing the house. Subject to means you need to fix the house needs to be railings, shutters, whatever. But what we're finding a lot now is my appraisal came back as is, but the underwriter gets hold of the file, it has their team look at it and goes, you installed a railing because FHA calls it railing.
Which happened recently. Yep. Recently on the deal we did.
Even though you got as is, the underwriter and the team know well enough that when they go try to sell the loan in the back end to the market, they're going to require railing. So let's get it done now instead of waiting later, because I promise you, it's easy to get docs when you're trying to get the house.
Then already own the house. Yeah. No, I mean, then one of the things to kind of like point out the difference with the appraisal and the inspection, and those are like points that you put in when you're negotiating the offer. And those are what kind of like strengthen or, fluctuate in different offers. And I mean, in my opinion, one thing that I always say is never waive the appraisal.
You can't waive the appraisal.
Oh, no, as a contingency in the offer. So there's a lot of buyers, believe it or not, I mean, more so during COVID than now, that they waive the appraisal as a contingency, which basically any buyer that waived the appraisal as a contingency, if an issue comes up after the appraisal, it's solely on the buyer to handle that issue. And, it's kind of like, it comes back to create some challenges for you, especially if you're at the brink when you're looking at number-wise and money that you're coming out of pocket to buy the house.
Well, you're looking to put yourself in a bad spot.
Pretty much.
That's a bad idea. Mm-hmm. That's a very bad idea.
So that's why, in my opinion, because there's another party involved that's going to look at the condition of the home or even evaluate the home, if I should say.
Remember, the buyers want the house to be worth less. The sellers want the house to be worth more. So you need a party that says, all right, let me just look at it objectively because I don't know if you buy or sell. Mm-hmm. And that's why it's so regulated where I can't, you or me are interest where the appraisal is on their own
and pretty much just evaluating the house to give you that feedback. So, it's the conditions are in the offer, but actually I'll track that back. You can waive both as condition, but I always recommend keeping the the appraisal as a condition because, I don't know, I feel like it's important.
Well, you can get it. Now we're getting too far. Depending on what you put down, if you put over 20%, you can get an appraisal waiver.
Okay.
That means you don't need appraisal, which you can just close, no problem. Why? Unless you're doing a refinance, it doesn't really matter. But if you're doing a purchase, I personally want to know what the house is worth.
What the house is worth, yeah. Other than the other parties that have interest.
Right. And a refinance, when you're trying to take money out or whatever, and you get appraisal waiver, it's your house. You already own it. I see why waiving it at that point works. But
Yep. Huh. Yeah. So we're kind of we've been talking about what we can take out in the offer. What are, in that spirit, what do you think are common mistakes that you see from your lending part that buyers?
Probably the big ones have realistic dates, right? So two big dates: commitment and closing.
Okay.
Right.
What's commitment?
Commitment is the underwriter reviewing the file and say, yes, this loan works. We're going to give you the money. Mm-hmm. Give me X. Give me these 10 things, and we'll give you the clear closing and buy the house.
Okay.
Commitment. The reason commitment is so important is once you give commitment, once you pass commitment, when your deposits that you've made when you made the offer and with the purchase sales are you can no longer get them back, right? Which is huge, right? Because you may see an attorney get a hold of we may give commitment. The attorney might see something on there that goes, "Oh, are you 100% sure you can get that item?" Goes, "Oh, I'm not sure." Mm-hmm. Let's not give commitment because if you can't get that item, you can't close on the house.
Yep.
We don't want to put your deposits at risk, right? So commitment is huge. So usually, if you got to accept that offer today, you probably want a week and a half on commitment. Right? Yep. Closing probably a month from today.
Okay.
Right? But I can't, when the market was nuts, right? Crazy. People are like, can you close in 2 weeks? I don't love it. We don't love it, but yeah. Extremely. But then that's the loan option going, hey, I have a buyer who's very difficult to get documents.
Yes.
Month and a half to get pre-approved. Can I close in 2 weeks? Yes, but no. Because I can get documents fast enough. And that's the relationship where there's no way I'm going to do it because I
already know.
Or if you have a realtor on the other side or a seller who's not organized, or if an issue comes up, can they solve it? No, then 2 weeks is not going to happen.
Yeah.
Right?
So you need everybody who's involved to be on their A game so that you could probably do a shorter closing than your typical 35 days.
On my house I'm buying and selling, the buyer of my house called me and goes, can you close in 2 weeks? So naturally you call the other side and goes, hey, are they organized? Yeah, they're already set, got commitment, all that. And I already know I'm solid, so yeah, I can close in 2 weeks. But you have that conversation, you don't just say, yep, you ask, I can, yep, done. Because what happens in 2 weeks, you're like, hey, I thought I was buying a house. Why am I going to do in 2 weeks? Funny you ask, It's a tough day, right?
Yes.
Because it is emotional, because once you have those dates in your head, you're closing, September 15th. Once you hear that, you're moving. It's starting your calendar. Yeah. You got moving trucks going. You got everything.
It's like everything is planned on the calendar. Even if you're renting, you're already probably set when you're giving your notice.
Yeah, you spoke to
your landlord.
Already. So if you can't hit those dates, I mean, biggest thing is just a bad experience for the buyer and the seller, a very bad experience. But now it was not. You lose that excitement a little bit. Now you get nervous. Like, am I really gonna close? Is there a problem? Right? Hey, what's going on? You get, my phone's blowing up, and everybody goes, "Am I closing?" Like, well, So, the dates are very important. You want to have realistic and make sure you can do it. Yeah.
I mean, have you? I just thought of that question. I mean, I'm thinking of some few stories. Have you had like extended closing days? Like serious extensions.
So I got one right now. It's been 4 months. But
Wow.
the reason they can't close is not because of me. It's the sellers inherited the house from their parents, who sadly passed away, but they didn't set up correctly where they don't have the right to sell the house. They got to go to probate court. But that goes back to having a great team. That should have been caught before the house was on the market. Now my buyer is limbo, right? We want a commitment. We're refusing to give commitment, right? Because if we want to back out, we want our deposits back, so they can go to another house. But now, when are we closing? I have no idea. Probate court can take forever.
Yeah.
Right? It's been 4 months already.
Yeah.
So, I mean,
especially if the other parties, what we were talking about earlier, having all the parties know and be involved enough in the process so that all the pieces can move and fit together.
Yeah. So that's what's going on right now.
The fun stuff. So, any tips that actually, before I ask for tips, do you think it's a good time to buy now?
Yes, absolutely. I tell you, I tell you when everyone looks at interest rates, and when I get this question every day of my life. Mm-hmm. When should I buy a house? When you're ready.
Yeah.
The interest rate's going to be the interest rate, and that it is what it is. The value of houses is going to be the value of houses, right? It is what it is. Yeah. Right. If I knew when houses are going to increase, or I knew when rates are going to drop,
that'd be golden.
Oh my God, the best thing in the world. So I don't. Yeah. Nobody knows, right? Don't be fooled. The experts, stop talking to me. Right, you don't know, right? If that was true,
I wish I had a crystal ball for every time, like say, oh yeah, 10 years, the market is going to crash.
Right. Like, I had a borrower. This is a true story where he was under agreement on a house. Mm-hmm. Interest rates at that point were like 4%, I think, around that point, right? Under agreement, we're ready to rock and roll. The loan easily worked. He was self-employed, like, everything good to go. And someone told him it's not a good time to buy. Wow. Me, the realtor, and everybody called him like, dude, no, please, like, this is a good house, like, this is a good deal, this is fine. Mm-hmm. You're not getting screwed over, nobody's, right? And I would say, break it down, whatever. Long story short, he backed out. Wow. Right? Didn't buy the house. Interest rates skyrocketed, right? They're around 7% right now. He can't afford that house he's on agreement on, because the DTI was that close. So mm-hmm. He can't buy the house that he was on agreement. And he called me and goes, I wish I listened to you, because I'm not here to push you, but I'm trying to advise you that this was okay. No one's looking to screw you over. Yeah. And he's like, I should have bought the house. He goes, you should have bought the house, because now you can't buy the house. Even if you wanted to, you can't buy the house because it doesn't work anymore. The rates are so high. Yeah. They're 3% higher than what you would have getting, and you thought you were getting screwed at 4%. You would kill for that rate right now. Right? So I always tell that story because when you're ready, can you afford the make number $33,000 a month payment right now? Yeah, then buy the house. Yeah, right about exactly. Drop, you refinance. If home your value goes up, great. You have houses worth more, right? Yeah. When I bought my house, my first house, it was just before the craziness. Yeah. I gained extreme equity because the market was nuts, right? And I'm in the process of selling it, but I didn't know that at that point. I was ready to buy a house with my wife, and we bought the house. But no one. When you're ready, you're ready. Make it,
Yeah, I mean, just do the budget, sit down with a professional. If based on that consult you believe you're ready, make the move. Yeah. So, any tips for someone who's thinking about buying a house in this current market today? What should they do? What advice do you have for them?
Work with people you trust, you feel comfortable with. We've all sat down with people in conversation with people like, I get a weird feeling, right? But if you, personally, if they trust you, and then and you introduce me to them, and You know, we click, we great, we work together.
Yeah.
Everybody you meet, you're not going to work with. You don't click. It's part of the world we live in, business, right? And be organized, right?
Yeah.
Get your W-2s, get your pay stubs ready, get your license ready. Is your license is it expired, or is your green card is expired, or work visa, whatever you got going on? Start getting that in order. Right?
Yeah.
You know, stop depositing large deposits, or stop doing a firm, stop doing Carolina, right? But if you think you're ready, or you want to be ready, what's ready look like for different people, just start having a conversation with professionals, right?
Yeah.
And see what ready for you looks like.
Yeah.
Right?
No, pretty much like meet with some professionals, have a checklist set, and then be able to check off everything on there so that you can move on to the next step. I think that's great.
I mean, there's no magic sauce.
Isn't there? No. But hey, thank you again, everybody, for tuning in. Thanks again. Make sure you follow us, Instagram, Twitter, and we're going to have some interesting conversation on our next episode.
Yeah.
Yeah, should we say? No. Make sure you
follow us.
and wait until next week for the next episode. Thank you.
Ciao.